We're gonna have the state auditor's office do a presentation this afternoon. We have Matt Hankins, an assistant audit manager, has been with the state auditor's office since 2012. During his time with the office, Matt has been part of the South King County team covering state and local governments throughout King County region. And then we have Megan McFarland. She's an assistant audit manager. Megan has worked with the state auditor's office since 1997. She's been on Team Port Orchard throughout her career with SAO and has been an assistant audit manager since 2014. She has served as SAO's Conservation District subject matter expert since 2016. And then finally, we have Jenny Waltman. She's a program and audit manager. Jenny has worked with the state auditor's office since 1998. She's been on the team Tri-Cities throughout her career with SAO and has been an audit manager since 2013. She's a program manager for conservation districts and library districts, and she's been the program manager for conservation districts for the past 8 years. So I will let them take it from here.
All right, thank you. Hello, everyone. For some reason, when I start sharing my screen, I can't see anybody anymore, and I can't quite see what you're seeing, but I'm hearing that you can see my PowerPoint presentations. So hopefully that's all working all right. So yeah, thank you all for joining us today. Hopefully it's awesome that we've got so many participants, both live and virtual this year. So if at any time during the presentation, if you have any questions, please feel free to either put them in the chat or speak up as you go through, as we go through our presentation, and then we'll also have some time at the end of the presentation to answer any questions that you may have. So, thank you for doing the introductions. We'll go ahead and just skip past that slide there. So during today's update, we'll go over the following primary areas. The first section we're going to go over is preparing for audits, and this is going to include an introduction to the state auditor's office and the different stages of an audit. And then we'll go through an overview of the prior year audits, looking back at a summary of audit results, and also talk about some reminders related to areas that we commonly see audit exceptions. Matthew will then give an overview of GASB 87 regarding accounting for and reporting of leases. And then we'll talk briefly about some changes in fund balance classification. And then finally, go over just a few pieces of emerging information that may be a focus for our 2021 audits. So with that, we'll get started. We thought we'd start off with a little overview of the state auditor's office. The state auditor's office is responsible for conducting audits of all local and state governments in Washington state. Our office has approximately 400 professionals located around the state, and we conduct over 2,600 audits each year. We audit all local government entity types, not just conservation districts. We also audit local governments, including counties, cities, school districts, fire districts, water districts, and even more entity types. Our agency also performs audits of state governments, including community and state colleges and universities, and state departments such as Department of Transportation, Department of Ecology, and Department of Health. So what you see here are the different types of audits and engagements that we perform, and the most common for local governments are the accountability, financial, and federal audits. Most conservation districts only receive accountability audits, so that may be the only one that you're familiar with, but there are a few districts that also need financial audits and occasionally may need a federal single audit. The purpose of an accountability audit is to determine whether the districts complied with state laws and contracts, grant agreements, as well as its own policies and procedures. The accountability audits also look at whether there are adequate procedures in place to ensure public funds are properly safeguarded. The financial statement audit is designed to issue an opinion on whether financial statements are free from material error and are fairly stated. In addition, a financial statement audit will also look at whether there's adequate internal controls in place to ensure the financial statements are prepared correctly and detect errors prior to being submitted for audit. And then if you're really lucky, or if you consider it lucky, and then your district gets large amount of federal grant dollars. If your district spends more than $750,000 in federal funds within the year, it will need a federal audit or single audit. It's very important to let your local audit team know if this is the case, so that way they can make sure to get your federal single audit scheduled to be done before the federal deadline, which for conservation districts would be September 30th. The objective of a single audit is to determine whether the district has materially complied with federal grant requirements. And as part of that audit, we're also looking at the internal controls that the district's established to ensure compliance with those requirements. Also, anytime a single audit is needed, we're also required to perform a financial statement audit. Our agency performs other types of audits or engagements that you see here, including performance audits, fraud or whistleblower investigations, and also reviews of citizen hotline concerns that are submitted to our agency on our website by anybody of the public. The next couple of slides, we'll walk through the main parts or stages of an audit, and we'll talk about what you can expect through those different stages. The pre-audit stage really starts happening even before you're aware of an audit. Your local audit team has evaluated when the best time may be to perform your audit based on any audit deadlines you may have, such as if you need a single audit, deadlines of other entities, and then also looking at auditor staffing availability. And as the time for your audit approaches, they'll reach out to the liaison to notify them of an audit, that the audit would be starting soon. And the audit liaison, if you're not familiar with that term, is someone at the district who's been identified as our primary point of contact for the audit. And it's often finance manager or maybe the district accountant. The auditor will usually schedule a pre-audit meeting with the liaison, during which time they talk about the timing of the audit, the scope, and the period, such as if it's only going to be an accountability audit or if it will include a financial audit, and if it's a 1 year, 2 year, or 3 year audit period. These pre-audit meetings may also be used to discuss communication preferences and availability of records and district staff in order to determine what the best approach is to going through the audit, whether or not you're going to work remotely or maybe consider coming on site to perform the work. Some of the records auditors typically request in a pre-audit meeting are things like the board meeting minutes, if they're not already available on the website, information about significant or high risk activity, such as credit card use, petty cash, travel accounts, and maybe even some of the contract or grant award information. Auditors may also ask for reports that show vendor payments and payroll payments so that they can analyze the activity during the period, during the audit period, and compare it to previous years. Luckily for conservation districts, most of these items are already provided during the annual report filing process as attachments to the Schedule 22. So this should help reduce the amount of records that the auditor will need to request during that pre-audit meeting. And then after your pre-audit meeting, if the auditors requested documents, you should start gathering those documents, send them to the auditor in the manner discussed with your auditor. For instance, records could be sent electronically through our secure file transfer site, or maybe you agreed for the auditor to come out and pick up records and check them out in order to use them offsite. So it's also a good idea to let your board know at this time about the upcoming audit, as well as the regional manager with the commission. And just so that you're aware that the auditor will also be reaching out to the regional manager at the beginning of the audit to let them know that the audit's beginning and inquire if there's anything that they'd like us to consider. And then the next stage is the planning stage. And during this time, the auditor is sorting through the available records, going through a variety of planning steps. And these planning steps are used to collect and analyze data about activity during the audit period in a way that allows us to use a risk-based approach to select areas of higher risk to focus on during the audit. So while we don't review all of the district's activities or financial transactions, we perform a variety of procedures in order to identify the areas or activity with the highest risk for noncompliance or the highest risk for safeguarding of public funds and assets. These planning procedures include steps like reviewing the board meeting minutes from the beginning of the audit period up to the most recent available. We'll perform trend analysis of different revenue streams or the vendor payments or payroll activity. We're analyzing financial ratios used by the districts or using the district's financial statements to see if there's any areas of concern about the district's financial condition or financial health. We also perform risk assessment inquiries with the audit liaison, key management, and a board member to discuss significant changes over the audit period. And these risk assessment inquiries also give you the opportunity to let us know if there's any areas of concern that you'd like us to consider when planning the audit. And then once all that planning is done, the audit team will have a brainstorm to finalize what areas they're going to be included in this particular year's audit. So usually early on in the audit process, the auditor will ask for the district to sign an engagement letter. This is typically signed by the liaison and a member of management or a board member. And then it's also signed by your audit team's manager as well. So the document serves as a written agreement between the state auditor's office, management, and the governing body of the district. It communicates the objectives of the audit, management's responsibilities, SAO's responsibilities, and any limitations of the engagement. The engagement letter will also include the estimated cost and timeframe for the audit. Then once planning is complete, the auditors will be ready to hold an entrance conference. And this conference is typically attended by the liaison, key members of management, if that's different than the liaison, and sometimes by a board member as well. So the meeting may be held virtually, or it could be in person, as we're starting to do a little more work in person again. And sometimes the entrance information is communicated more informally through an email communication, depending on the size of the audit. This could also, if the district prefers, or if there's an audit team preference, sometimes for those smaller audits, we'll do those through email. But during the entrance conference, the audit team will communicate the areas that they plan to include in the current audit. And it's also a good opportunity to share any emerging information that we feel the entity should be aware of, and share some information on resources that are available from our office as well. So as the audit moves into the fieldwork stage of the audit, the auditor will be more focused on gathering information related to the specific areas that were identified in that entrance conference. Oh, yeah, okay, I advanced the slide. Sorry. So we'll be looking at areas that are specific to this year's audit. So in general, our audits include asking questions in order to get an understanding of the controls or processes in place at your specific entity. And then once we have that understanding, it'll help us in testing the records available in order to determine if the district's in compliance with the applicable laws or policies, as well as helping evaluate the internal controls and making sure that they're adequate to safeguard public funds or assets from loss or misappropriation. So this part of the audit can be a little more time consuming for the audit liaison or staff, because the auditor is going to be requesting several documents to be pulled for them or sent to them. For instance, if they're testing general disbursements, they may have selected 20 vendor payments and request to see the invoices or receipts that support those payments made to the vendor. And at the end of our presentation, we'll go over a few of the areas that we anticipate may be included in the 2021 audits. And depending on the length of your audit, the auditor may ask to have a weekly audit status meeting with the liaison. And these meetings are very helpful to keep the audit moving forward and to ensure the district's always aware of where we are in the audit process. So having a weekly status meeting can help the auditor consolidate requests for records. For instance, if they can ask for things just at this weekly meeting rather than every day, or if something comes up, it could help it make it more efficient. So It also gives the auditor a designated time that they know that they'll be able to ask those questions that could help them complete an area. So the auditor will usually use these meetings too to share what the status is for the various areas of the audit and discuss any potential concerns or issues that have been identified at that point. The weekly meetings also provide an opportunity for the district to ask questions or discuss any concerns that they have throughout the audit process. Then once the field work is complete and the work's been reviewed by the supervising auditor or the team's manager, the auditor will begin the wrap up or concluding stage of the audit. And as part of this process, they're drafting any audit recommendations. There are 3 levels of reporting for recommendations, and we'll go over those in a minute here and talk about the difference in the significance of the levels of reporting and then how they affect the audit reports as well. But once those audit issues are drafted and reviewed by your audit team, then the auditor will share them with the audit liaison before the exit conference. And we always want to make sure and share it before the exit conference to help make sure that our reporting is accurate and answer any questions that you may have about the recommendations that are being made. Auditor will also ask for a management representation letter during this stage of the audit. And they will provide you with a template of the letter that the district puts on its own letterhead, signs it, and returns it to the auditor. The representations made by district management in this letter confirms information such as the auditor had access to the people and records they needed, the information provided was accurate and supported, and that the district complied with laws and regulations, contracts, grant agreements, and things like that. District management is also acknowledging its responsibility for compliance with various requirements in the letter. The auditors are actually required to have this signed letter before publishing the audit report. And so they usually ask to receive it either just prior to or the day of the exit conference. So the exit conference is one of the final steps of the audit process. And these meetings are usually attended by the liaison, key members of management, if different than the liaison, and 1 or more members of the board. And the auditors are required to ensure that all board members are informed of the results, but ultimately it's up to the district who would like to actually attend the exit conference, because we can always send out the same information to any board members that aren't able to attend. So during the exit conference, auditors will share the results of the areas audited, share draft audit reports, and then answer any questions that you have. If there are any management letter recommendations or findings, the auditor will present those at the exit conference. And it's also a chance for us to talk about when the auditor expects to issue the audit report, as well as a timeline for your next audit. And then lastly, and generally this step happens after the exit conference, but the audit reports will be published. So you should have already seen a draft of the report or reports during your exit conference, so there shouldn't be any surprises in it. And those reports are usually published within a few weeks or so of the exit conference. Anyone can sign up through our website to receive notice of when a report will be published, and that email notification will not only let you know when the report's going to be published, but it also includes directions on how to find the report on our website once it's published. So moving to levels of reporting. As I mentioned previously, our office has 3 primary levels of reporting. These include findings, management letter recommendations, and exit items or exit comments. So findings constitute the most significant level of audit recommendations that can be issued. And audit findings are included in their entirety in our audit report. If a finding's issued, the district will have the opportunity to provide a response to the finding, and that their response will also be published in our report. This is important to help readers not only understand the issues found, but also any information that you wish to share about how or whether the issue is being addressed. And in some cases, there are certain external standards that may require audit issues to be reported as audit findings. This is most commonly encountered when reporting issues in the financial and federal audit engagements. Management letters are the next level of reporting that we have. Management letter recommendations communicate control deficiencies, non-compliance, misappropriation, or abuse that are less significant than a finding, but still important enough to be formally communicated to the Board of Supervisors. Management letters are referenced in our audit report, but the body of the letter itself or the issue itself is not included in the report. The letter would be given to the board and all those attending the exit conference. And then exit items are our lowest level of recommendation. Exit items address control deficiencies, non-compliance with laws or regulations, or errors that have an insignificant effect on the audit objectives. It could be a situation where overall we felt the district was in compliance, but maybe noted a few minor exceptions. Or maybe another example could be there's an opportunity to strengthen controls by implementing a policy or maybe segregating duties between different positions. So oftentimes these exit comments are best practice recommendations. These issues are communicated to management prior to the exit conference and are generally not discussed or presented at the exit conference, as we don't feel that they rise to that level of significance of needing the board's attention. So next, Jenny is going to give you an overview of the results of all conservation district audits over the last year, and then talk about some common areas where we saw audit recommendations made.
Well, thank you, Megan. I appreciate that. Thank you all for joining us today. We really appreciate that. We're here today to talk about different areas, and starting off with the recommendation, kind of giving you a summary of what we've seen as far as recommendations. We usually do this every year, and so we thought we would add on last year's and the year before, so you can kind of compare and see what the recommendations are that we're seeing with the conservation districts over the last 2 audit cycles. So for this past audit cycle for 2021, there were 31 recommendations. And then the audit cycle before that, there were 22. And these are based off of the audits that have been completed. There are just a couple that are still outstanding. But overall, this is a really good result. And of those 31 recommendations, there were only 2 findings and no management letters, and all the rest were exit notes. So that's just a fantastic job by all of you, and we really appreciate that. So here's kind of a breakdown of those recommendations by area. And as you can see, there are some areas that stand out more this year than the last audit cycle, and some that are still continuing. And these are recommendations we thought we would share with you, so you can kind of see when we go to audit the areas that we're focusing on, and what we found in our recommendations that we share with you. And disbursements, it's kind of a high risk area that we look at pretty much in every audit, along with payroll. And a new statewide theme is looking at electronic fund transfer. We've seen this recommendation not only with conservation districts, but with all of our local and state government statewide. So that's another key area. And so you can see there are some minor recommendations for different areas, nothing that significantly stands out. But what I'm going to do is go through some of these areas, not all of them, and just highlight some things that we see in that will help you be ready for us when we come on site, and maybe some things that you can do to strengthen your controls over these areas. So the first one, just some reminders on disbursements with your credit cards. When you have credit cards, you want to make sure that you have a credit card policy in place. And those are state law that outlines what you need to include in your credit card policy. such as how many credit cards you'll have, who's responsible for the credit card, who's handing out the credit card, what are your limits when you turn in your receipt, when the reconciliations will be performed. You want to have a credit card policy in place, so when we come on site, we can audit to that credit card policy. And sometimes you might have limits on how much you can spend per transaction. That might be something to include. The other thing is sometimes conservation districts have special kind of expenditures where there may not be a specific policy, and we may not be able to tell if they're allowable. So for having policies in place for these kinds of things would include like policies for reimbursements, maybe reimbursements for meals, or maybe you purchase something for the district, or maybe reimbursement for training. Also employee awards, maybe you have an awards program, have a policy for that, workwear and meals and travel. Having policies for these help us to determine whether or not the expenditures, when we look at them, are allowable in accordance with their policy. The other thing is making sure you have support for all of your transactions. There's a state law that outlines that we need to have support for every transaction that we have. So retain those receipts and invoices that support your disbursement. And then the last thing is try to segregate duties. I know this is kind of hard when you're a really small entity and you're the only person that maybe does everything, the payroll, the receipting, the reconciliations, the disbursement. It's helpful for you, and it protects you to have somebody else take a look at your work. Maybe the board member or board of supervisors or the executive director can take a look and make sure that everything's going okay. The other area is on electronic funds transfers. We've been including recommendations to make sure you have a policy in place that will enable you to monitor these types of transactions and make sure that they're legit transactions. What we've been seeing statewide, both in the private and governmental industries, is transactions that are not legit through inquiries by making phone calls or even email of people requesting to have things change, either account numbers or names or things like that. So having a policy in place to make sure that any changes to EFT transactions, whether they're through vendors or payroll, is helpful for you to ensure that these are legit changes. Maybe have them come in person and make sure that they're really who they say they are. And maybe you have on file when you first set up the vendor or payroll person, you have the phone number or address and matching that up to the request that you're receiving. There's also a resource on our website that you can go to that gives you some ideas for implementing a policy to ensure that when you do make these types of transfers, that they're for a legit reason. Some reminders for payroll is to, when we come on site, we select some employees and we look to make sure they're being paid the right amount. And when we do that, sometimes there's not like a form or salary schedule or contract. So it's hard for us to know if the employees are being paid the amount that was authorized by the board. And sometimes they might say, oh, well, it's within our budget, and that might be okay, but sometimes the budget just has a total amount, and so you don't know what the exact amount is approved for each individual employee. So developing a formal board-approved policy by position or range of pay, and it might include steps or updating your salary schedule on a yearly basis, usually at the end of the year when you talk about the budget for the next year. Having that document in place is really helpful for us, so we're able to tie out the approved salary to the actual amount that was paid. And sometimes for executive positions, maybe you don't use a salary schedule. If not, maybe have like a formal contract in place that this is how much we're going to pay you a year and we'll update it yearly, or it's good for 5 years, or whatever that might be. Having that formal contract in place is helpful. And then document that and include that information in the personnel files. Another area is just plant sales. You have plant sales. You go out and you buy some plants and then you sell them. And then with that comes a process of tracking them to make sure that you're getting all the funds you should be receiving, and having a beginning inventory of how many plants you purchased, how many you sold, and then comparing that to the revenues that you received to make sure that you received all the funds you should have. And then whatever was left over, whether you continue to sell them or maybe you disposed of them, which is okay, but you would like to have a surplus policy in place of how you would go through that disposal process, since you are purchasing those using public funds. And then the last area is just some reminders on procurement. Procurement policy, they change every year. The dollar amounts for different types of procurement, they're always changing, whether it's architect and engineering, public works, or purchases for equipment. And the state amounts and the federal amounts are also changing every year. So it's really good to just take a look at those and make sure that your policies that you have for procurement are in line with those dollar amounts and the changes. And also for quotes, it's different than formal bidding. And so that's another thing to keep in mind with your procurement. And then when you do procure items, you want to make sure that you have a signed contract in place so you know how much the item is that you procured for and the services that you're receiving. And that's important to have that as well. And then last, just a note on federal procurement, if you do receive federal funds and you're using those funds to procure maybe public works or equipment or architect and engineering, that you're using the most restrictive threshold. Sometimes it's the federal one that's most restrictive, sometimes it's the state one. So you want to take a look at that and make sure you're using the most restrictive threshold for when you go out to procure using federal funds. And so that's part of the wrap up of the recommendations. And what I'm going to do now is pass this on over to Matt. He is our new subject matter expert for Conservation District. And he will be talking to you a little bit about GASB 87, which is leases. And this may or may not apply to you, but it's kind of been a big theme area statewide. It's a new GASB that will be coming out in the future. And while you may or may not report GAAP and you might report cash basis, some of these leases might need to go on your Schedule 9. So Matt, I'm going to hand it over to you.
Okay, thank you, Jenny. Good afternoon, everyone. Today we'll take some time and talk about GASB 87 leases. The implementation of this GASB was one of many that was delayed due to COVID. It was first.
We can't hear you.
I'm sorry, am I not speaking loud enough? Pardon me. Okay, I'll start over. Okay, so just want to say thank you again, Jenny, and good afternoon, everyone. Today we'll spend some time talking about GASB 87 leases. The implementation of this GASB was one of many that was delayed due to COVID. It was first set to be implemented for fiscal years ending June 30th, 2020, and it is now effective for fiscal years ended June 30th, 2022 and later. We are in an implementation year now, so we wanted to make sure to bring it to your attention again and make sure that you know of the resources that are available on our website, because the implementation can be very time consuming depending on the amount and type of leasing activity that you may have. As we go through the next couple of slides, I just want to point out that they are for entities that prepare cash basis financial statements. Our website has guidance for GAAP financial accounting, but since all the conservation districts prepare cash basis statements, we focus on that. So it's important to note that GASB 87 applies to new leases going forward, but also applies retroactively to existing agreements. Also, there are reporting and accounting requirements, whether you are the lessor, the owner of the asset, or the lessee, the user of the asset. One of the first steps in implementation of this GASB is to create an inventory of all your existing leases, contracts, and agreements so that you can evaluate what qualifies for reporting and what does not. One thing to keep in mind, not all leases will be called leases in the documentation. It could be called a contract, but still meet GASB's definition of a lease. It depends on the substance of the agreement, not the name. So another note, not all leases are subject to accounting under GASB 87. Some of the more common exclusions that conservation districts may have are contracts that transfer ownership of the asset to at the end of the lease, or possibly a lease of biological assets such as timber, living plants, or living animals. Short-term leases are also probably going to be the most commonly excluded leases. Short-term leases are those that have a maximum term of 12 months or less, including any options to extend. Again, these are all exclusions that are not subject to accounting under GASB 87. Next slide, please. Okay, so once you've identified all the leases, for those where you are the lessee or using the assets, you are going to calculate the total amount of the future lease payments and report that as a lease liability on Schedule 9, also known as the Schedule of Liabilities. For cash basis financial statements, you do not need to worry about calculating the present value of those future lease payments. Just simply calculate the total amount of the future lease payments. Then, as you make the lease payments, record the expenditures to bars 591 to reduce the lease liability. Next slide, please. Okay, for leases where you are the lessor or the owner of the assets, when you receive lease payments, you would record them to a 340 revenue account, but only if leasing is the primary operation of that fund. Most likely, though, for conservation districts, leasing is not going to be the primary operation of that fund, so the lease revenues will likely be recorded to BAR's account code 362. One thing to note here, these new account codes may be applicable for tracking your lease payments this year in 2022. So if you haven't already, you might want to start using these new account codes. Otherwise, you might end up at the end of the year and realize you need to go back and recode all the payments. Okay, next slide, please. Okay, so that was a quick introduction to GASB 87 for leases. Our office has put together a whole page of resources and information at the link shown on the slide. That's on our website. That breaks down the accounting and reporting requirements for both GAAP and cash basis entities and includes more information on required note disclosures, frequently asked questions, and links to the actual GASB and other resources. I especially wanted to emphasize that this web page has a link to a video that goes in more depth about the GASB and how to implement it, specifically for a cash basis entity. This video really digs into the definition of a lease and can help you with many of the technical questions you may have. Okay, next slide, please. The next slide shows where the leases project page is located on our website. So if you go to our main home page and hover over the BARS and Annual Filing tab and click on the BARS Cash Basis Manual, you will see the Leases Project Page link located on the sidebar there as shown on the slide. And if you look on that page, you will see at the top of the page, there's a list of quick links to get you to the section that you need. All right. Okay, so this next slide is about fund balance classification for cash basis entities. This is just a reminder about changes to fund balance reporting that went into effect for cash basis entities starting back in fiscal year 2020. Most districts have likely already implemented this change and may have already had auditors ask questions about how the district classifies its fund balance reported on the C4 and C5. However, this is a relatively new change, so we are providing another reminder about the definitions for those who may be new to the change. So first we have non-spendable. These are amounts that are legally or contractually required to remain intact. They can only be used for permanent and private purpose trust funds. This is generally seen if, for example, a citizen gives an endowment to the government and states that the principal must stay intact, but the government can use the interest as it sees fit. Next up is restricted. These are amounts that are externally imposed by creditors, grantors, contributors, laws or regulations of the other governments, or imposed by laws through constitutional or enabling legislation. So those are external restrictions. Committed, these are amounts that are internally restricted. This must be done at the highest level of decision-making authority for a specific purpose in a formal action that remains binding unless removed through similar action. So if your governing body, as an example, makes an ordinance or resolution to set aside money for a specific purpose, and they decide they don't want to do that anymore, they must pass an ordinance or resolution to remove that. And a note regarding budgets. While a budget is passed by ordinance or resolution, they're usually not considered specific enough, and they are not removed by ordinance or resolution. So therefore, they don't fit that committed classification, or likely would not. Next up is assigned. These are amounts that where the intent for the use of the funds for a specific purpose has been expressed in a couple of different ways. It could be either done by the governing body itself, or the governing body could delegate that to a committee or official. And last on the list is unassigned, and that's simply the amounts that don't fit into any of the other categories. So your auditors may have questions about how your fund balance classifications were determined, so it's probably a good idea to have that analysis available to be able to provide your auditors if requested. And just one last note, for more detail on these classifications and other considerations regarding fund balance reporting, you can refer to the applicable cash basis bars manual section, a link to which has been provided on the PowerPoint slide. And next slide, please. Okay, this slide shows some areas of audit focus for upcoming audits. So the first item on there is EFT controls and testing for payroll and vendor transactions. So unfortunately, payroll and vendor EFT cyber-related frauds continue to exist. So auditors will consider this audit area. Auditors might inquire regarding what types of EFT transaction your district processes, your policies and procedures over ensuring EFT transactions are properly documented, and how the district ensures EFTs are legit and only sent to the intended recipients. Next area here is financial conditions, indications of financial distress. So your auditors will be using the financial intelligence tool and other information to review for indications of financial distress for cash basis entities such as conservation districts. Auditors may have follow-up questions if they identify fit indicators not meeting the fit benchmarks, or if they identify any other indications of financial distress, for example, through review of the minutes. Governments may consider reviewing their fit indicators to help prepare for questions the auditors may have. And the last emerging focus would be open public meetings, compliance with meetings, executive session requirements and minutes. So auditors will review documentation of governing body minutes to evaluate compliance with requirements of the Open Public Meetings Act. They will look for items such as that the purpose of executive sessions is documented in the minutes and allowable, that executive session start time, estimated time originally announced, and any extensions and end time is recorded in the minutes, that business is conducted at special meetings, that any business conducted at special meeting is for the reason that the meeting was scheduled, and for some other requirements as well. Okay. And with that, I'll turn over to the next slide.
Okay, I think we have about 15 minutes left in our time. If there are any questions, we do see that there was one question that came into the chat asking about how do we handle copier leases that have maintenance supplies built in with no detail. I think Jenny was working on typing in a response to that, but we are assuming that you're asking about the how do you handle the copier lease amount if you can't break out the costs for the maintenance and supplies if they are built into the cost of the lease. And so she was going to put a response in, assuming that's the correct understanding of your question. So if not, if you can let us know. I think that was submitted by, looks like by Valerie. While she works on that response, is there any other questions that have come in? Or anybody else have any other questions that we can address for you?
I don't see any other questions on my end, Megan. Just, do we have anything in the room? Doesn't look like we have anything in the room as far as questions are concerned.
Okay. And Valerie, thank you for clarifying there. And then it says, yes, specifically, do we just report the whole amount of the payments as the lease obligation? And Jenny's response is, if the maintenance supplies is part of the lease agreement, then it would be recorded as a liability. If the maintenance supplies is separate from the lease, then you would want to break those out and record those as expense. So. Okay.
Okay, Megan, I think we have a question in the room.
Okay.
So I assume a lease would be different than if you were renting a vehicle for 1 or 2 days as a district. You would need to report that in the lease, even though you're like signing something with your vehicle rental place.
Did you hear that, Megan?
I lost the tail end of it. I heard a lease would be different than renting a vehicle for a few days, but I
Correct.
couldn't hear what was after that.
That was basically the question.
Okay.
If we're renting a vehicle for a couple days, that's a short-term lease, doesn't need to be reported.
Correct. It would just be an expense of the district, right?
Okay.
Yeah, it would not be considered a liability or a true lease in the accounting terms if it's just renting it for a day or two. Any other questions we can answer for you?
I think that's it, Megan.
Okay. If you do have anything else that you think of after we sign out here, you're welcome to, oh, I do have one more slide there with our contact information. You are welcome to email us or call us at any time. And as always, we have our help desk available on our website as well. That's a great resource for you to use. And so that is at www.sao.wa.gov. And you can always submit questions there. And what's great is it will go to a person that specializes in that area. So if you have financial statement questions or questions about this GASB, it'll go to somebody that is very knowledgeable in that area and answering those types of questions statewide. So that way we can help ensure consistency in our responses and guidance. So, but you can always email us as well. So, all right. I
Well, thank you guys.
guess we will sign off and let you have an extra 10 minutes there then. So,
All right. Thank you so much.
all right. Thank you.